All right, so welcome. It's an honor and privilege to have you here, Caesar, to have you here on this Zoom to educate prospective buyers and sellers about title insurance. Right off the bat, Caesar, why don't you introduce yourself for those who don't know you?
Hey, I will, Luis. Thank you. I appreciate it. So my name's Cesar Garcia. I'm with WFG Title, and I've been in this industry now for about 18 years.
Wow, 18 years. That's a long time.
Yeah, it's
Okay,
it's
and I
been a
just
while.
yeah, just people like to know a little bit about the person. Where'd you like grow up, or where'd you go to school?
Well, I grew up in East LA.
Mhm.
So I went to like Garfield High School, is where I went, class of '93. So I was going to school there with Oscar de la Hoya.
Oh wow.
So it was kind of interesting times because that's when he was up and coming and in the Olympics. But
Uh,
I grew up there, and my family still lives there for the most part. And I believe it or not, I mean I'm there almost every other day as well.
oh wow. Okay, that's amazing. Okay, so then now where do you live now?
I live in Downey,
Downey. Okay,
so yeah, so about 10 minutes away.
10 minutes away.
So
Okay.
it's like I never left the neighborhood.
Wow, wow. Okay, so and you work in title for 18 years. It's a long time. What company are you with right now, and how long have you been there?
So it's a WFG title, and I've only been with one company for 18 years.
Wow.
I haven't moved, and just it's a great company. I have great relationships. Um, I learned a lot there, and the thing though is that we've closed deals. So when we have especially files that have problems, knowing people having a relationship is what matters and counts, and that's usually what ends up closing the transactions for buyers and sellers.
Okay, that's fantastic. And I mean, you've been a great resource to myself, to a lot of clients, and so they're really lucky to have you for all these
I
years.
appreciate it. Thank you.
Sure, sure. So to educate the buyers and sellers, what is title insurance?
So title insurance is and it's a little confusing when you first hear it because a lot of people think that maybe it's has to do like with fire insurance because it's obviously real estate related, and they think, oh, it's like homeowners insurance and it's fire and you pay it every year, and it's nothing like that. It does cover and protect your home, or the owners of the home, but it basically ensures that the property is free of any debt that does not belong to the current owner.
Okay, so the property is free of any debt, so the new owner is going to get a property not having any debts to it.
Any
Correct?
debts that belong to previous owners,
Previous owners.
uh,
Okay.
correct. Previous loans, any taxes, anything that might be attached to a property that is not against their name, that's what we insure. That's what a
I see.
title company insures. So then that way they don't have to worry about like, hey, two owners ago they had a loan and it still keeps showing that it's not paid. Am I responsible for it? If you bought your property at the time with title insurance, you are not liable for it.
Okay. Okay. So if I buy a property, it has title insurance, it's going to be free and clear. Only my new mortgage is going to show up if I have a mortgage. Correct?
That is correct.
The other owners, their problems are not going to be there. Okay. Okay. Now
Correct.
I know there's two types of insurance. Can you talk about that? The two types of title insurance, owners versus lenders?
Right. So there are two, and lender's insurance is usually when it's a refinance, because in that transaction, the only party that is being insured is the new lender, because obviously you already bought the property. So when you bought the property as an owner, you got an owner's policy, and that owner's policy insures you for however long you own that property. As long as you continue to be the owner and on title, regardless if you refinance or not, you are still insured. It could be 20 years, it could be 30 years. That's not, it doesn't expire. Uh, so when you do own your house for 10 years, say, and then you decide to refinance and you get a new loan, the lender is insured because the new lender wants to be insured. Hey, there's no other loans ahead of me. The loan that I'm giving you now is the only one on the property and nothing else is owed on it. So that's what we insure them. That's a lender's insurance. An owner's policy is issued when you buy the property for the very first time. And like I said, it doesn't expire. So as long as you remain on title, you are covered for the life.
Okay. So when someone buys a property, my understanding is they get owner's an owner's title policy, which is
That is
lasts
correct.
the full duration when they're on title of the property.
That
And
is
then
correct.
only when you refi, you get a lender's title policy, and that protects the lender. Is that
That is
correct?
correct. That
Okay.
is correct.
Okay. So when you buy the property, there's only one. There's only the owner's title policy. It's not two title policies when you buy
Well,
it.
no, in a sale transaction, there is two. There is an owner because we're insuring you as an incoming new owner, and
Mhm.
also a lender if you get a mortgage.
I see.
If you don't get a mortgage and you buy the property cash, then there's only one issue.
Okay. Okay. So there's when you buy it, sometimes there's going to be two, and a lot of sellers ask this question. This is the question they ask. If it's protecting the buyer, if this policy is protecting the buyer, why do I have to pay for it?
Well, it's actually the policy. There's one for the owners and one for the buyers, but it's
Yes,
the one policy, and each party pays their own share.
I see. Okay.
So if you're buying it and you're getting a loan, the lender is asking the buyer who is borrowing the money to pay the title insurance on their behalf. You
Yes.
would think the lender would pay it, but obviously the lender is not. The lender's like, buyer, you're the one that needs to loan. You need to pay for the insurance,
Okay.
right? So you pay your fee. And in a sale transaction, the buyer's title policy is always much lower than a policy for the seller. The
Mhm.
seller covers, on their way out, making sure that the property is clear, all the debts have been satisfied, taxes, judgments, anything like that has been taken care of. And as a title company, we issue a new title policy ensuring the new owner, the buyer, and the lender who made the loan to purchase the property.
Okay. Okay. So I know that typically in most transactions, except for like cash deal, the buyer might pay for the owner policy. But the question people have is, if it's protecting the buyer, why do I, the seller, need to pay for it? Is there an answer to that? What do you think? How would you answer that? Why doesn't the buyer
Well,
just pay for it?
uh, you logically, yes, you would think that that would be the case. However, you got to remember, since I'm a seller, I'm selling the property. We also have to make sure and check the owner at the time that they have no other debts, they have no taxes, they have no judgments. So that way, when the transaction happens and the new grantee is recorded transferring title, they are clear of any debts moving forward on this property, and title assumes responsibility. So let's say we miss a loan that the seller had for whatever reason. We are human, mistakes happen, and we miss it. We close a transaction. Hey, congratulations, Mr. Buyer. Here's your new property. A year down the road, that lender sends a letter. Hey, we never got paid. Well, guess what? It's because you got title insurance. It's our responsibility. We will have to pay that debt.
Okay, so I see that the title, the title policy is going to research the owner of the property and see what encumbrances or what liens or what debts they have that may have been reported on the property.
That is
So
correct.
the owner is giving the buyer a free and clear property, free of the
Right. It's
past
it's
history.
like it's a clear title.
Okay, and then what are some common issues that arise with title?
Well, in title, if you are on title, judgments, say you had a credit card, you didn't make payments, they got a judgment on you. Guess what? The day you get on title on a property, it attaches to that property. Uh, Income tax, you owe the federal government taxes. They put a judgment against your name and your social, it attaches to the property. Child support. The list goes on and on. Somebody sues you in a car accident, they can get a judgment on you. Say at the time you didn't own a home, you're like, well, I don't have any money. Say 5 years later, you buy a house. Guess what? That judgment attaches to the house without you being aware of it, all because it's attached to your birthday, social security. And so therefore, when you're going to make a real estate transaction, we always require this form called a statement of information, where it's asking for your name, employer, where you live, your last four of your social, date of birth. And that's how we're able to detect hey, this judgment belongs to you or it doesn't belong to you. Because if we run it just based on the name, there's a lot of, a lot of people with the same names. We wouldn't be able to find out if it really is you.
Okay. So you're searching all these records or all these different things you just mentioned, debts and liens and creditors and tax liens and things like that. You're searching all these things and you're making sure that the buyer is going to have the property free of all this stuff, right?
That is correct.
Okay. And then your title search, how far back does that go?
Um, Most records, well, we can go pretty far back. We can go 40, 50, 60 years. But a lot of times we only need to go to the last time that it was insured, which is maybe usually tends to be 10, 15 years because homes, are changed hands every 10, 15, 20 years or so. But technically the last time that it was insured by a title company, that's how far back we have to go
I
because
see.
there was insured at that time. So we assume they did their due diligence. Property was clear of all debts. So moving forward, this is the new loan that was on there taken out 15 years ago. Now that person is selling or refinancing. And so we only need to go back that far. Now there are instances where people have owned homes for 50 years and they did nothing in between. Well, we can go that far back. Sometimes, depending on the city, we might have to request these documents because they don't have them on the computer anymore. We actually physically, somebody has to go in to the city hall and get copies of documents because those don't have them. They're not on file.
I see. I see. Now, you mentioned a specific example. Like you said, if I'm the seller and I had a lien that was missed by you guys, and the new buyer had the property that with title insurance, you would cover that lien, or how would that work?
Correct. So let's just say that that problem occurs. So your new owner will receive a letter, from the previous bank saying, "Hey, we had a loan on this house. We saw that it was sold. We weren't paid. It's still due." And legally, they are still owed that money. Luckily for the new buyer, if they got title insurance, all they
Mm,
would need to do is contact the title insurance company and let them know, "Hey, I got this letter from this lender. Seems like you guys missed a loan. You guys need to get in contact with them." And then we open up a claim and we reach out to that lender, and our legal department will follow up with them in trying to resolve that matter
I get
where
it.
it doesn't affect the owner at the time.
I see. I see. And then what are some specific title problems? You said a lien, but is there any other specific title problems that can occur that can be resolved through insurance?
Um, well, I mean, it goes anything from liens, judgments, encroachments, easements. For example, an easement is, let's just say there's two properties and they share a driveway. If a document is missed and not put in the preliminary report that we generate when the property is being sold, basically to let the new buyer know, hey, this driveway is being shared by both of you guys. Therefore, you cannot build a wall or a gate and close it off because then you deny access to the other property. That would be something that we would be responsible for.
Okay.
And
So you're going quick. You're sharing a lot of information. It's very resourceful. So what I heard was a preliminary title report. What
yeah.
is that, and why is that important?
So basically, when a property is being sold or refinanced, escrow will request a title prelim report. And a prelim report is basically an examination of the property going back to the current owner.
Okay.
And we're making sure that how many loans are on record, if taxes are owed, is there any judgments or lawsuits pending on the property, and it's a report that is generated. It is sent out to all parties, the lender, the buyer's agent, the seller's agent, so they can review it. That way they know what's on there, and if they have any questions, that's the time to ask. Now, like I said, if title misses something, obviously you don't know it was there because we didn't put it in the report.
Mhm.
That's why we're liable for it
Okay.
moving forward. So when you get that prelim report, you get to see what's on there. It doesn't concern so much the new buyer because everything that is on that report pertains to the seller and everything should be satisfied. Judgment should be paid, taxes should be paid, the loan for the previous owner should be paid at the time of closing. So then that way the owner gets their house, their new grant deed showing them as the new owners. And if they got a loan on the property, that one loan, that's it.
Okay, so the buyer and the seller and their agents are gonna review this preliminary title report, or this prelim. And then, what's after they've reviewed it, they're gonna sign off on it, correct?
That is correct. If
Okay.
everything looks correct, that they don't have any questions, any concerns, then it's basically just move forward. The lender approves it. Most importantly, the lender has to agree with it. The buyer's lender has to agree with the prelim report. If they have a question, they will bring it to our attention because if they I don't like something, they're not going to fund. They're not going to send the money in to close a transaction. So the lender has to be satisfied with it.
Okay, okay, and then at the end, you'll provide the insurance and it'll close escrow.
That is correct. So if everybody signs off on it, the lender wires in money, it's recorded, escrow closes, the seller gets their policy, the buyer will get their title policy, and the lender will get also their title policy sent out to them, a physical hard copy in about 2 to 3 weeks after the closing.
Okay, so there's buyers and there's sellers. What advice do you have for sellers regarding title insurance?
Well, as a seller, you always want to get title insurance as well because you want to make sure that you don't have any issues with the property that is being missed. Because if you sell the property, guess what? That problem is going to come down the road and title will come and ask you, hey, Mr. Seller, you remember when we sold this property? Unfortunately, there was this judgment or these taxes weren't paid. They're still your responsibility. We need you to, please pay that. And usually, like I said, if title does their job, we don't have that situation. Everybody walks away, they shake hands, deal transaction is closed, everybody's happy, and you don't have to hear from anybody again, right?
Okay,
Because if everybody did their job.
and so once again, just so to be clear, the worst case scenario for a seller, if they don't get title insurance, is, you say it again?
Well, the thing though is it's not up to them to get title insurance, it's really the buyer. Because in a sale in the state of California, if you're a buyer and you ask for a loan, all lenders require for you to buy title insurance.
Yes.
Now, the only way you can go around that is if you buy it cash. And if you buy it cash, guess what? You don't have to buy title insurance, and neither does the seller. But the risk, and it's a very big risk, is as a buyer, if you buy the property cash, you save yourself, let's just say $1,000 for the title insurance, and the seller saves 1,500. When you close escrow, you better hope that there's no taxes owed by the previous owner or any loans or any judgments. Because if that happens, guess what? They're attached to the property, and as the new owner, are responsible for them. Even though they are not under your name, they are physically attached to the property. So when the new owner, decides to, let me refinance or let me sell my property, you will have to satisfy those debts that don't belong to you, all because you avoided, let's save $1,000 and not get title insurance.
I see. Okay. Very helpful information. And are there any, would you say, misconceptions or mistakes that people have about title insurance?
Well, I think the biggest misconception they have is it something that you have to pay every year, like home insurance, fire insurance? And the answer is no. You only have to pay it once when the transaction takes place, when you purchase the house or you refinance the house, and that's it. And you are insured, like I said, for the future as long as you remain on title. And so when people find that, it's like, okay, it's just a one-time fee. I don't have to keep paying it every year. Then that kind of makes sense where they're like, oh, okay, then yeah, we'll buy it.
I see. Okay. So it's a one-time fee and people think it's so much more. That's a misconception. And are there any, would you say, upcoming changes or trends in the industry that is being talked about or being discussed?
You know, there is in other states, and it usually starts in one state, and then it'll kind of start taking a trend and maybe going on to other states where they are trying to maybe pass a law where you don't need to buy title insurance in a real estate transaction. And that that possibility can it realistically could happen. But again, there are no lenders in California that would lend you money without you buying title insurance.
Mhm.
So
Yes.
it kind of goes back to that. If you're going to get a loan, you're going to buy title insurance because that lender wants to be insured and wants to make sure, hey, my loan is in first position. And the reason they do that is because if you stop making your mortgage payment and they have to start a foreclosure, they want to make sure they get paid first.
Yes. Okay.
you know
Okay. So
so
that's
so we don't see that going anywhere, but you always kind of keep an eye on it, but it's not here in California at this time.
okay. So appreciate the info. So you've been a resource for title insurance, providing the information, the prelims right away. Besides that, you have been a resource for other areas for buyers and sellers. So Cesar, what else are you able to be a resource for buyers and sellers besides just it's not just, but besides insurance, what other
Correct.
resources are you available to?
Well, I mean,
Or
fortunately,
you know people that you provide. So
right. So fortunately, in this business, over time, you start building relationships, and believe me, every day you learn something new. So there is nobody in this industry that knows everything because things are always changing, laws are being changed, modified. So everything is always changing. So in the course of my career, I have you start to learn about dealing with the cities when it comes to the inspectors, building and safety, uh, with the tax assessor, especially. That's very important because you want to know, like, hey, if I transfer property to my kids, will my taxes go up? That's a very, question that everybody wants to know. The first question I want to know, will my taxes go up if I transfer to my kids? As of like 4 years ago, the answer was always no, it's not. No problem. You can transfer whenever you want. No problem. That changed here in LA County like 4 years ago. And once it changed in LA County, it started to change in the other counties here in Southern California, Orange County, Riverside, San Bernardino. Okay. And that is now the county requires, yes, you can transfer it to your kids, but your kids have to live in that house. That has to be their primary residence in order for the property taxes to not be reassessed. Something that was not required 4 or 5 years ago. And that is a huge change because if you record a grand deed where you transfer it to somebody else and they don't live in that house, guess what? Your taxes will be reassessed at the value at the time that you did the transfer, and there is no going back. Once you record the document, it's a done deal. You can't go back to the county and say, oh, county, I'm sorry, I made a mistake. I wasn't aware that I couldn't do this and my taxes were going to go up. The county's going to say, I'm sorry. The laws are what they are, and it is.
and that's definitely the case, Caesar. But you've been a resource, and there's been some clients that we've had too, in Pomona and Long Beach where their taxes went up substantially. You were able to provide a contact within the county tax assessor that they contacted that contact and they tried to work it out so that their taxes wouldn't be adjusted in the way that they was devastating to them. And can you
Correct.
tell us about that? I mean, because
Right.
I know one in particular was very thankful for the resource and saw it coming to fruition, that it was not the way he originally saw it happen.
Correct. So luckily, like I said, in this business, you get to meet people, and when you come across somebody, like especially dealing with the county or the assessor's office, that actually enjoy doing their job and are very helpful. And we'll mention her name. If she gets to see it, I'm sure she will appreciate it. Her name is Rosario Jauregui. She is an assessor for the Los Angeles County Homeowners Division, and she's been very helpful not only to your customers but to a lot of other clients of mine that I refer to, because the thing though is the county is so huge that as an individual, you don't know which department to go to. You go to one department, that department says, oh, we don't handle that. You have to go here. You go to that department, and then like, well, no, you have to go talk to so and so first. And what ends up happening is you get frustrated. And what do most people do when they get frustrated? They just leave it alone, walk away. It is what it is. And that's not the case. So with Rosario, I talked to her, I met her a couple years ago. She's been a wealth of knowledge and advice. That we, like you said, we've helped our customers, we've helped our clients that have to do, whether it be transferring property, it has to do with their living trust, or when parents passed away, the affidavit of death of when it was recorded and so forth like that. That creates your property taxes to be reassessed at a certain point that, like you said, as for some people who are like on set income that are retired, it's devastating because those property taxes are due. The county doesn't care how you pay it. They just want their money.
Yes. Okay. Thank you. Thank you for that. And hopefully, people can take advantage of the service that is. Now, another service you provided, because sometimes people have called me like nervously, fearful that they're going to have to pay some kind of big commission if they want to put the property into someone's name or take off someone's name. And I've just, told people, I'm not sure how many of them actually come to you. Hey, call Cesar. You can draw up a document, putting the title in the new person's name, or, creating a new deed, and you have a referral for someone to just notarize it and record it. Tell us about that.
Correct. So also, in order for you to transfer title to somebody, you obviously need a document that is it's called a grant deed. There's another form, it's called a quitclaim deed. You can use either one. They both serve the same purpose, but they have to be filled out correctly with specific details that generally it is public records, but again, people don't know where to find them. So when you don't know where to get this particular information, it makes it very difficult to do. So then people think, oh, I need an attorney. Well, if you go to an attorney, attorneys are not cheap. They're very expensive. So all you really need is a notary that knows what they're doing. And luckily, I've come across a notary. Her name is Daisy. She's been very helpful. She creates the document. She meets the customers. She's a notary, a mobile notary at that, where she can meet the client at their home or at their place of preference, sign the document, and then we can help them record it. All at a convenience of them not having to go, well, where do I record it? Do I have to go to City Hall? No, in LA County, you have to take it to the county recorder's office, which is in Norwalk.
Okay. So she creates. I thought it was you guys that create the document. So
So she creates it. What I provide is like the previous document recorded on the property, because that's the specific information she needs to create the new one.
I see.
And so once she does it, we'll review it, just make sure that all the T's are crossed, the I's are dotted, gets it signed, she notarizes it, and then it gets recorded, and then it's a document of record, and the transaction takes place.
Okay. So we're running out of time here, but just if I wanted to sell the property to my cousin, how much would it cost me roughly to prepare the document, notarize it, have it recorded, and have you review it? How much does that cost roughly?
Well, when you say sell it, are we going to go just outside of escrow and title?
Well, I'm just going to transfer it into his name.
Okay, so if you're going to just transfer it, to create the document and record it, and as long as and the key question here is owner occupied. If it's going to be owner occupied, because remember, if it's not owner occupied, then you're going to have another tax bill because the property is going to be reassessed. But assuming it's going to be owner occupied, you're probably going to total maybe $200 to record and to create the document. And then the transfer is done. Now, just keep in mind, this is a common practice that people do all the time, but you should know that when you do get to the point where you are going to do a bona fide transfer, meaning you're going to do either a refinance or a sale using title and escrow, there would be another document that you'll have to sign at that time, because the document that we recorded to transfer the property to your daughter or to your dad is what we call an uninsured deed. Uninsured being it wasn't through title. It wasn't insured in a real transaction. It's still legal and the transfer takes place, but that way people know ahead of time and they're not surprised by it when they're ready to make a real transaction.
I see. Okay. Okay. No, thank you. Very, very resourceful. And any other messages you want to share with the potential buyers and sellers, property owners about title insurance or about?
Well, yes, and I mean, I don't say that. I don't say this because I'm in the industry. I say it because it's the smartest thing to do. You know, real estate is great. Buying properties and selling properties are great, but at the same time, you have to protect yourself. And when I say that, I mean you have to use a good escrow and a good title company. Use a good agent, you know, that will relay all the messages, will explain it to you in the language that you understand, you know. And if it's going to cost you a little bit of money, do it because you want that protection. In real estate, like in life, you know, you pay what you get for. So if you want to save a couple dollars here and a couple dollars there, you know what? Maybe that one time it didn't affect you, no harm. But there's going to be that one time where you're like, oh man, you got yourself into a problem and it's going to cost several thousands of dollars just to defend yourself or to pay that judgment when you could have just, you know, spent $1,000 on title insurance and you're covered and you don't have to worry about it.
Yeah. Okay. Well, thank you for this time, for your
Of
continued
course.
support and being a resource for a number of buyers and sellers.
My
Thank you so
pleasure,
much.
Luis.
So I'm going to put Caesar's information here in the description here of this video. So is that okay? Is that okay if they
Yes,
contact you directly?
definitely. I would appreciate that. And
Yeah.
any questions, please call me
Yeah. Yeah.
or reach out to Luis and he will reach out to me and we'll help you the best way we can. Definitely.
Okay. All right. All right. Thank you. Thank you for everything, Caesar. We'll be in touch.
Okay. Thank you, Luis. Have a good
Okay,
one.
have a good one. Take care.
Bye bye.